Most people don't realize there's an ETF that lets you invest like Warren Buffett and potentially replace your job's income. It's called the Vista Shares Target 15% Berkshire Select Income ETF, ticker OMAH. This fund holds Berkshire Hathaway's top 20 stocks, including Apple, Coca-Cola, Bank of America, and more, giving you exposure to companies that have powered Buffett's legendary track record. If you're serious about building passive income, hit like and subscribe so you don't miss out on strategies like this. In this video, I'll break down the facts, tax advantages, and a strategy that could generate high monthly income. Let's take a closer look at how OMAH stands out from the rest. When you think about investing like Warren Buffett and earning substantial income at the same time, it might seem out of reach. But that's exactly the opportunity the Vista Shares Target 15% Berkshire Select Income ETF, ticker OMAH, aims to deliver. The main idea behind OMAH is simple. Combine core equity exposure to Berkshire Hathaway's top 20 holdings with a high-yield income strategy, making it possible for everyday investors to access both growth and regular cash flow in a single fund. Most ETFs force you to pick a side. You either choose a growth fund which reinvests profits and focuses on long-term appreciation, or an income fund which pays out dividends but might not offer much in the way of value growth. OMAH is different. It's designed to eliminate the trade-off by giving you exposure to a portfolio built on the same companies that anchor Warren Buffett's investment philosophy. Think Apple, Coca-Cola, Bank of America, American Express, and Chevron, while also targeting a robust monthly income stream. OMAH's approach is built on mirroring the top 20 publicly disclosed holdings in Berkshire Hathaway's portfolio. These are companies that are not only well established and profitable, but also tend to be out of reach for many newer or younger investors if you tried to buy them individually in meaningful amounts. With OMAH, you get fractional exposure to all these stocks as part of a diversified package. The fund rebalances its holdings every quarter based on Berkshire's most recent 13F filings, so your investment stays closely aligned with Buffett's current strategy, without you needing to track every move or research every quarterly update yourself. This structure is especially appealing if you're looking for a way to invest in blue-chip names without needing a large account balance. Instead of saving up to buy enough shares of Apple or Bank of America to make a difference, you can buy a share of OMAH and instantly own a slice of all 21 stocks in the fund. That's powerful, especially for investors who want to follow Buffett's lead but don't have the resources to build a similar portfolio from scratch. Another key point is accessibility. OMAH has already grown to over $220 million in assets under management in just a few months, reflecting strong demand and credibility in the ETF space. This level of scale not only signals broad investor interest, but also adds stability to the fund's operation and income strategy. But what really sets OMAH apart is its focus on delivering income. Many traditional ETFs reinvest the dividends they collect, so you don't see the cash unless you sell your shares. OMAH, on the other hand, is structured to provide monthly cash flow directly to investors. This is a major advantage if you're looking to supplement your income, cover monthly expenses, or simply see the tangible results of your investments more frequently. At the same time, you're still positioned for long-term capital appreciation, since the fund's holdings are some of the most reliable and value-oriented companies in the market. Adam Patty, CEO of Vista Shares, has highlighted that OMAH was created to fill a gap in the market by combining the principles of value investing with a high-yield income approach. The fund's value-tilted portfolio is diversified across sectors, not just focused on a single industry or a tech-heavy index, which helps mitigate risk and provide a more stable ride for investors. This means OMAH is built to weather different market conditions while still aiming to generate consistent returns. For younger investors or those just starting out, OMAH offers an accessible way to invest alongside Buffett without the need for a massive portfolio. You're not just collecting dividends from one or two companies. You're getting a piece of a broad, carefully curated portfolio with the added bonus of regular monthly distributions. And unlike many high-yield funds that take on excessive risk or rely on unsustainable payouts, OMAH strategy is grounded in the same value principle that have made Buffett successful over decades. The fund's expense ratio is 0.95%, which is higher than some passive ETFs, but it reflects the active management and the complexity of the option strategy used to generate income. According to Patty, investors are getting a higher yield, often 300 basis points more, compared to other income-focused products, which can make the higher fee worthwhile if income is your goal. So how does OMAH actually target that impressive 15% annual yield? And what makes its income strategy stand out in a crowded ETF market? That's where the real mechanics come into play, and understanding them is key if you want to see how this fund might fit into your own investment plan. So how does OMAH actually pursue a 15% annual yield, and why does that matter for investors looking for both income and stability? OMAH's approach is built on a two-part strategy. It combines a portfolio of Berkshire Hathaway's top 20 publicly disclosed holdings with a disciplined, data-driven options overlay. This blend is designed to deliver a consistent 1.25% monthly distribution, adding up to the fund's 15% annual target, while also seeking to protect and grow the fund's underlying value. The first part of OMAH's structure is straightforward. It holds large, stable, dividend-paying companies like Apple, Bank of America, and Coca-Cola. These blue-chip stocks provide a reliable foundation and produce steady dividend income. However, dividends alone can't get you to a 15% yield, so OMAH adds a second layer, a conservative option strategy. By selling covered calls and puts on its core holdings, the fund collects premium income, essentially renting out its shares to other market participants. This premium income is a key driver behind the fund's ability to meet its ambitious payout goals. In practice, OMAH's management team applies a methodical, rules-based approach to options trading. Their goal isn't to chase quick profits or make speculative bets, but to generate predictable, recurring income month after month. The team closes out positions and rolls them into new ones as needed to maintain the 1.2% monthly distribution. This approach is designed to keep risk in check and avoid the pitfalls that often trip up high-yield funds. Since launching, OMAH has demonstrated consistency in hitting its distribution target. In the first 3 months, distributions have closely hit the 1.25% monthly goal, showing that the fund's process can deliver what it promises. This level of reliability is uncommon among high-yield ETFs, where payouts often fluctuate or require dipping into capital to maintain headline yields. OMAH's management is clear about their commitment to the target. With Target 15 in the name, the team is committed to delivering that target income each year. Adam Patty, CEO of Vista Shares, has emphasized that maintaining the 15% annual yield is central to the fund's mission and operational discipline. The 15% target wasn't chosen at random. The fund's creators wanted a yield that stands out in the crowded ETF landscape, but they also knew it had to be achievable without taking undue risks. Their solution was to balance an attractive yield with a conservative, data-driven options overlay and a focus on maintaining NAV stability. Any income generated above the 1.25% monthly distribution is reinvested back into the fund's NAV, helping to offset any drag from options trading and supporting long-term growth. For investors, this structure means you aren't forced to choose between income and growth. While you receive steady, high-yield monthly payouts, the fund is also working in the background to preserve and potentially grow your investments over time. Dividends from the underlying companies are reinvested into the fund, rather than paid out directly, which helps the NAV compound and supports future distributions. This reinvestment approach is especially valuable for those who want to build wealth steadily while still enjoying tangible monthly income. Skepticism about high-yield claims is understandable, especially given the track record of some income-focused funds that sacrifice long-term value for short-term payouts. OMAH addresses this by relying on a systematic, conservative option strategy and blue-chip equity holdings, rather than riskier tactics. The fund's method of generating income is transparent and repeatable, reducing the likelihood of capital erosion that can plague other high-yield products. For younger investors or anyone seeking both immediate income and the potential for long-term growth, OMAH's dual approach offers a compelling alternative. Regular monthly distributions can be reinvested to amplify compounding, while the fund's underlying holdings and reinvestment practices help preserve value. This makes OMAH more than just an income ETF. It's a tool for building wealth with a focus on both stability and cash flow. But here's another layer to OMAH's appeal that goes beyond just the headline yield. The way the fund structures its distributions can have a significant impact on your after-tax returns. If you're interested in keeping more of your monthly income, OMAH's tax advantages are worth understanding. One of the most overlooked benefits of OMAH is its focus on maximizing after-tax income through a strategy called return of capital, or ROC. This feature gives OMAH a unique edge in the crowded world of high-yield ETFs, especially for investors who want to keep more of what they earn each month. Understanding how ROC works and why it matters can help you see why OMAH stands out from the competition. With most high-yield ETFs, the income you receive is generally taxed as ordinary income in the year it's paid out. That means a significant portion of your distributions goes straight to taxes before you can spend or reinvest it. OMAH takes a different approach by classifying a high percentage of its distributions as returns of capital. Instead of being taxed right away, these ROC payments are treated as a return of your original investment, so you don't owe taxes until you eventually sell your shares. This deferral can have a real impact on your bottom line, giving you more flexibility with your money in the present and allowing your investments to compound without the drag of annual taxation. Adam Patty, CEO of Vista Shares, puts it simply: you want to have the providers of the products maximize that ROC, because what that does is it defers your tax obligations to when you sell the product. By prioritizing ROC in its distribution structure, OMAH gives investors more control over when they pay taxes, potentially timing it for a period when they're in a lower tax bracket or have other offsetting losses. The fund's monthly 19A-1 notices, available on the Vista Shares website, shows just how effective this strategy has been. In March, about 95% of OMAH's distribution was classified as ROC. In April, it was around 87%, and in May, it came in close to 90%. This consistency demonstrates OMAH's commitment to delivering tax-efficient income, allowing you to keep more of your monthly distributions compared to funds that pass through mostly taxable income. Why does this matter so much? The answer comes down to compounding and flexibility. When you receive distributions that aren't immediately taxed, you have more money available to reinvest or use as you see fit. For younger investors or anyone with a long time horizon, this tax deferral can accelerate wealth building. If you reinvest your distributions, you're compounding growth without the yearly reduction that comes from paying taxes up front. If you use the income for living expenses, you can do so without reducing your principal or worrying about immediate tax penalties. It's important to recognize that ROC doesn't mean you'll never pay taxes. Instead, it allows you to postpone that tax bill until you sell your shares. This delay can work in your favor, especially if you expect to be in a lower tax bracket later in life or want to manage your tax situation more strategically. For example, someone planning to sell OMAH shares in retirement could benefit from the lower income levels typical at that stage, minimizing the eventual tax impact. Compared to other high-yield funds, OMAH's approach reduces the risk of losing a chunk of your income to taxes every year. Many funds boost their payouts through methods that increase your tax liability or may even erode the fund's long-term value. OMAH's focus on ROC helps avoid these pitfalls and keeps more money working for you. The fund's consistent ROC percentages, ranging from about 87% to 95% month after month, show that this isn't just a one-off tactic, but a core part of OMAH's ongoing strategy. This level of tax efficiency is rare among high-yield ETFs and can make a significant difference in your after-tax returns over time. For investors who want to maximize their monthly cash flow and retain more control over their investment outcomes, OMAH's tax structure is a real advantage. It's especially appealing if you're focused on long-term growth, want to reinvest your income, or simply prefer to manage when you pay taxes. The ability to defer taxes while still collecting substantial monthly distributions is a powerful tool for anyone serious about building wealth. Understanding how OMAH's tax advantages work is one thing, but what does this look like in practice? If you put real money into the fund, how much income could you actually expect to receive each month? And could it really make a difference in your day-to-day finances? Taking a closer look at the practical side, let's examine what a $20,000 investment in OMAH could mean for your monthly income. With the fund's target of a 15% annual yield, that investment would generate about $3,000 per year, or roughly $250 each month. This income comes from monthly distributions that reflect 1.25% of the fund's net asset value, not just share price fluctuations. For investors seeking regular cash flow, this structure provides a reliable stream designed to land in your account every month. Now, $250 a month might not sound like it could replace a full-time salary, but consider what it represents in terms of passive income. At $25 an hour, that's about 10 hours of work, or closer to 20 hours a month at minimum wage in many states. For entry-level or part-time positions, $250 can easily match or exceed a week's after-tax pay. This monthly payout could cover everyday essentials like groceries, utilities, or a portion of your rent, without any active effort on your part. For anyone looking to build financial flexibility, these distributions can serve as a practical cushion, reducing dependence on a single source of employment income. It's important to keep expectations realistic. The fund's ability to deliver that $250 per month depends on the performance of its underlying portfolio and the consistency of its options premium income. OMAH aims to maintain its monthly target by blending divisions from its core holdings with a disciplined options overlay. This two-pronged approach is designed to generate steady returns, but it's not immune to market volatility. Fluctuations in the value of the fund's holdings or shifts in option market conditions could impact income levels from month to month. Another factor to weigh is the fund's expense ratio of 0.95%. This fee directly reduces your net returns, so it's crucial to factor it into your calculations. However, Adam Patty, CEO of Vista Shares, points out that the trade-off can be worthwhile. We're providing 300 basis points more income for 28 basis points more expense. So at the end of the day, that's a good trade. The higher yield relative to other income-focused products can offset the increased cost for investors prioritizing consistent cash flow. The flexibility of that $250 monthly income is one of OMAH's strongest advantages. If you choose not to spend it immediately, reinvest those distributions, whether back into OMAH or another asset, can accelerate the compounding effect and potentially lead to greater long-term wealth. For younger investors, this could mean building a foundation for financial independence. For those with more immediate needs, the monthly cash flow can help smooth out expenses during times when active income is unpredictable, such as during a career transition or while pursuing further education. Still, sustainability is always a concern with high-yield investments. OMAH's structure is built to support ongoing distributions by reinvesting any excess income into the fund's net asset value, helping to preserve the principal even as it pays out monthly. But like any fund that targets above average yields, results can vary over time. The fund's covered call and put strategies are designed to provide consistent option premiums, but market downturns or changes in volatility can affect outcomes. This means that while the fund's process is robust, there's no guarantee that the 15% yield will be met year after year. Comparing this income to traditional work, $250 per month likely won't replace a full-time job for most people. However, it can serve as meaningful supplement or even partially offset the need for additional part-time work. For younger investors, this payout could cover recurring costs like student loan payments or car insurance. For those in or nearing retirement, OMAH's monthly income may reduce the need to tap into other savings, preserving principals for longer. And for anyone juggling freelance or gig work, the fund's steady distribution can provide stability that side hustles might not always offer. It's also worth noting that OMAH's underlying portfolio is built from Berkshire Hathaway's top holdings, companies known for their stability and prospects for long-term growth. This means your investment is not only generating income, but it's also positioned for potential capital appreciation. As Adam Patty puts it, the fund's goal is to deliver both monthly income and capital growth, making it more than just an income play. Ultimately, whether $20,000 in OMAH can fully replace your job's income depends on your individual needs and financial goals. For most, it won't eliminate the need for traditional employment, but it can reduce reliance on your primary paycheck and open up new options for managing your finances. The steady $250 monthly payout could ease financial stress, help cover essential bills, or be reinvested for future growth, giving you more control over your money and your choices. Rather than viewing OMAH as an all-or-nothing bet, it makes sense to consider it as a part of a broader, diversified portfolio. It can complement traditional growth investments, such as an S&P 500 ETF, and offer a value tilt that may reduce volatility. For investors seeking a balance between income and growth, OMAH's structure and strategy offer a unique way to approach financial planning. This perspective highlights how a fund like OMAH can play a meaningful role in reshaping your cash flow strategy and supporting your long-term goals. In conclusion, OMAH stands out for three core reasons. It gives you exposure to Berkshire Hathaway's top holdings, targets a 15% annual yield distributed monthly, and delivers favorable returns of capital treatment for tax efficiency. This structure can help you pursue steady income, long-term growth, and more control over your after-tax returns, all within a single ETF. Consider if OMAH deserves a spot in your portfolio. Your future cash flow could depend on it. If you've learned something new about ETF income strategies, hit like and subscribe, and let me know in the comments if you've added OMAH